welcome to Trading the Close. Man, what a wild day in the markets today. We had markets pushing up higher. The news broke Iran did attack some bases in the Middle East of the United States. And then the markets just tanked. And then all of a sudden we reversed and started pushing higher for the day. So we're all closing green on the day. Oil is dropping severely. That kind of paints the picture that the conflict between US and Iran may be over. We'll see, though, but that's what the charts are showing me. All right, let's jump into the data we see here on the market overview and summary page right here. We see that we've got the Dow Jones is now up 0.86%, Nasdaq's up 0.81%, S&P 500 up 0.9%, US oil right here down 7.65%, gold up just slightly, up 0.23%. Bitcoin staging a decent recovery over the weekend. Price was underneath $100,000. We're going to get into that chart and show you why price is doing what it's doing at the time. All right, so jumping into the heat map, we see here on the S&P 500, a lot of green on the screen. One straggler here, Google of the mega caps is down for the day 1%, but Microsoft, Meta up solidly, as well as Netflix too. Tesla was a big winner of the day. Down here, you see 8.36%. We're going to look at that chart a little bit more, but robo-taxis were rolled out in Austin, Texas today. Amazon down 0.6%. Aside from that, a lot of green aside from the energy sector. ExxonMobil, CVX, Chevron, they're all down today. Feeling the pressure with oil dropping tremendously. All right, so let's jump into the S&P 500. And what do we see here, folks? We see price action now poking back above this declining trend line. This market truly has been resilient. In the face of headwind after headwind after headwind, we still are pushing higher on the charts. It's really remarkable. So you look at this bull flag pattern that's forming. Are we going to break out? That's what I'm thinking now, because all of this buying sentiment with all of these headwinds starts to lead me to believe we could still be going higher on the charts. The one area to watch, though, this high pivot at 6,059. Watch what price action does once we get into that area. That should help dictate whether we close above and then move higher and then close and confirm, or whether we just still stay stagnant right here in this area. And to show you the intraday price action on the S&P 500, look at this mammoth move. So here we are at the beginning of the day right here. So we gapped up, looked like we were about to go negative for literally about 3 to 4 minutes, and then ripped higher. Then the news came out about Iran's attack. We sold right off. But notice too, where did that happen on the charts? Right there on the trend line. Guys, we're going to go through several instances today where trend lines and education applies, because when you know how to draw these trend lines correctly, it doesn't matter what the news is. The trend lines are there for resistance and showed us exactly that price was going to get a reversion at that place. Then in the afternoon, ripped right through it since that area has been weakened. Truly remarkable stuff. And with a minute to go, the markets are still pushing higher. Really, really interesting. Next up, we've got the Qs. Notice here on the Qs, we formed more of a rounded top than what's been over on the S&P 500. So this is curious, though, with tech has really been pushing and leading the way with this onslaught of new AI developments, robotics, etc., even quantum computing. Tech has really been pushing and leading the charge, and it's very evident in the SMH, which we'll look at here in a second. But on the Qs, next resistance area to watch, double top, 540.81. Should all of this start faltering, notice how we kind of have a left shoulder, and then ahead, we don't have a right shoulder yet, but first area of support that would be significant is down here at 493.46. Next up, the SMH. Now, we were speaking about the SMH last week about how this inclining trend line has yet to be violated. Now, it has already on the Qs as well as on the S&P 500, but on SMH, it's staying a little bit stronger until today. Today, we did break this trend line. Like, all in all, this is not a bad thing, but it's not great for SMH. We would have, all the bulls in SMH would rather have seen price action come hit this trend line and then bounce up and go to the next area of resistance, which is going to be this bottom area of the parallel channel. We did not do that. We just sifted right through this trend line. If we go into the 10-minute chart, you can see there too, when price action did break down, we made an attempt to come back up and test this trend line and haven't quite gotten up there yet. But at the beginning of the day today, you can notice right down here at 9:30, right here, you notice price action moved up, moved up, moved up, and then boom, right into that trend line. Again, trend line analysis helps guide the way, folks, and showing you that price action was likely going to get rejected at that area. And sure enough, it did. So we'll see what happens with the SMH. Remember, SMH is a leading indicator for the markets. If we start rolling over on SMH, I would anticipate the rest of the markets would soon follow if they wouldn't be doing so already. Into the IWM. Now, the IWM, another important chart to pay attention to. Again, we're not near all-time highs on this chart like we are on the spiders and the Qs, but we had a significant breakout of the IWM over the past couple weeks of trading. This area down here on the trend line, should selling persist, will be support right around 202.13. If you notice here, this move down, and we've really been chopping sideways. This is bearish consolidation right now on the chart. So it makes sense for price to come down on IWM to tag this trend line before moving up higher. The next area of resistance on the chart is 221 that you see displayed right there. Now, it doesn't mean just because we have this bear flag pattern, we could fail with this bear flag pattern and we could shoot right up to this 221, especially if the spiders start pushing, especially if the Qs start pushing too. We would likely start seeing tailwinds start taking effect and pushing the rest of the markets up. But what the chart's showing me right now, probabilities dictate we likely are coming down, tagging this trend line before going up and attacking that resistance at 221. Next up, Bitcoin. This has been awesome, folks. Now, I've been showing you this inclining parallel channel for months now. I think I drew this back in November, and when I first came on trading the close in December, I showed this parallel. I said, this is really telling me the whole story of Bitcoin, especially around the $100,000 price point. So let's jump back into the chart. I'm going to show you right here yesterday on Sunday, where did price come? It came right down to the bottom end of this parallel channel and bounced up. You couldn't get a better hit than what we experienced there. Notice there, that was 4:10 Eastern time where price came down, tagged that area, since has not looked back and is pushed up nicely on the charts of Bitcoin. So where is Bitcoin going? So ultimately, though, we see this inclining trend line, and we're getting very close to that resistance. That resistance is $103,825 on the charts. That would be the next area if it gets tagged today. We could end up chopping sideways, maybe create bullish consolidation. That would then dictate a break above that area, in which case, notice this area, and I'm going to slide this this little box out of the way. Notice this declining trend line from pivot to pivot, and notice where it intersects. Right at the 50% area of this parallel channel. These 50% areas continually have rejected price in the past, so I'd anticipate the same sort of action to happen again. If we do break through this initial trend line right here at the 103.5 value point, right around 104,000, we are going up to 108.5, 108,637 is displayed on the chart, and that will be the next area of major contention on Bitcoin. Next up, gold. Gold really didn't have much going on today, but you notice it is kind of tailing off slightly, just a little bit. We still do have a measured move potential up to 36.21 is displayed on the charts. But again, this daily topping tail as well as a weekly topping tail on the charts are really going to prove difficult for gold to push through. Even with this geopolitical conflict, we still haven't ripped higher on gold. That should be telling a story to everybody involved or interested in investing in gold. It may be due for some time to pull back and cool off a little bit before coming up and hitting that 36.21 level. Next up, silver. Silver did also chop sideways today, and that's perfectly all right for this chart. Consider that silver has moved so much in the most recent history. Now, what would also make sense for silver is a pullback down to the support area, 34.86. This initially was a resistance area as a double top here recently on the daily chart, and we busted on through it. Now, it would make sense for a retrace to the scene of the crime, buy in this zone for potential measured move up from this inverse head and shoulders pattern all the way up here to $38.97. I would be a buyer if price on silver gets under $35. Into US oil. Now check this out, folks. So we did have over the last week, and really it seems like a while since I've been doing trading the close, we broke back up after poking above, coming back in. We broke back up and never really confirmed on this move. Notice price never closed above this breakout candle and confirmed up there. So that left the downside vulnerable. And why I think the conflict in the Middle East may be simmering off between the United States and Iran, I could be completely wrong, but look at this on the charts. This is showing us that that strait that Iran is planning to block, or at least has threatened to block, is really falling on deaf ears. Because if they do block that strait, that'll interfere with the oil flow going to China, which Iran supplies a boatload, literally, of oil to China. And if they close that Strait of Hormuz, then this would not be happening. Oil would be going up higher, but we see oil coming down on the chart. So I see this as almost a bluff on Iran side that maybe that strait won't be closed. We'll see though in the coming days. If it is closed, you can better believe oil will start ripping back higher up to this $80.73 area. Initial support on oil at $66.48. Next up, Nat Gas got slammed the last 2 trading days. Notice all this positive momentum, and this is why they call this commodity the widowmaker. It is really hard to peg a trend on Nat Gas without it reversing course and doing so sharply, much like the last 2 trading days that you see here on the chart. So with price now breaking this inclining trend line, the next support target you have to watch for Nat Gas is $3.69. It is the top end of this declining trend line right here, which if you notice, we broke out above on this trend line and confirmed right here, continued moving up higher. Now this area, this zone is now support for the Nat Gas chart. We'll see how that plays out in the coming days, but a move down into here should yield a bounce at least up to this trend line, potentially up as high as retesting this $4.18 resistant area. Next up, 10-year yield. 10-year yield started drifting a little bit lower today, which is all good news as far as money access and acquiring. So nothing much new to report there. However, this also kind of confirms my thesis on maybe the conflict starts to simmer down a little bit. The reason being, war is typically inflationary. It creates a lot of government spending. It also creates jobs. It's an influx of money into the system. So war typically would start driving up interest rates. We'll see, though, how the reaction is on the 10-year yield with any developing updates on the geopolitical side. Next up, the dollar. This is not necessarily the greatest thing to see on the dollar. Dollar, as you see, coming right back down underneath this declining trend line that you see here on the chart. The reason that's not that great is because a weakening dollar also does correspond with a weaker outlook for GDP. So that could mean, exactly like with our upcoming tariffs, our trade with other countries could be dwindling and going down, and thus the demand for U.S. products will be likely going down too, as what's showed here on the chart of the U.S. dollar. So the dollar's coming right back down underneath this inclining or declining trend line. Area of support is going to be down here at $97.80. Notice how this has been tagged several times. If this breaks, the next area of support is quite a bit lower, down here at $94.93. Next up, Tesla. As I mentioned earlier, Tesla did roll out robo-taxis in Austin, Texas. They didn't roll out a huge slew of them. They have rolled them out, though, nonetheless. And so investors piled into Tesla right here. If you notice, this move up is a bull flag, correct? So then the bull flag measured move is right here at 375.60. We'll watch what price action does now that it's gotten above this declining trend line. If we confirm tomorrow, if we do, next stop 375.60 on Tesla. And if all of this gets negated, the next area of support on Tesla is going to be right down here, just under $300, right at this inclining trend line. Next up, Mobileye. Now, Mobileye is in the same space as far as providing autonomous driving. So you see Mobileye also did have a fantastic day today, up 11.55% on the back of news of with Tesla rolling out the robo-taxis. Now, right now, I want to get into a little education with you on this chart to show you how each candle, when it prints, it really shows you a new piece of the puzzle, displaying what the chart is likely to do and what the probabilities dictate. So, all right, so we get back into Mobileye. All I'm doing with this is just simple trend lines. All right. So I get this trend line. We had a breakout here. Notice we never confirmed above here. We had a breakout here, never confirmed. And then finally, boom, a breakout and confirmation that flips this trend line to support, and any move down would be a buy for a higher move up. So what do I do here? I took a trend line here from this pivot and just draw it over to this pivot. And I can even extend it all the way back. And you see how this all kind of lines up right here in this zone of pivot to pivot to pivot. So you could have predicted price coming right up here and getting rejected, but then ultimately it made another attempt and broke through. So we've got now two trend lines giving us a lot of information. Now that price is broken up above this trend line now is the support. But now with price going up, we have to figure out where's the next area for price to stop. So I take this exact same pivot, and you notice if I string that out to the next major pivot, this one right here, we see the next area of resistance on Mobileye. And what does this create, folks? This creates an inverse head and shoulders pattern. Now, it's important to note that the inverse head and shoulders pattern has not yet been triggered. We need to get price to close above this trend line and then confirm. And then once it does, look at this. We're talking about an inverse head and shoulders measured move up to $23.49. That's how you 1, 2, 3 step through charts. You see chart patterns, you react to them, you draw your trend lines, find the areas of support, find the areas of resistance, and then play them when the chart tells you to do so. You don't just FOMO, you don't just blindly throw money at a chart. You try to analyze the chart through these trend lines. And I know, folks, it may look like, to a lot of you that don't understand this, it may look like a little bit of Star Wars action going on with these lines going across the screen, up and down, left and right, but it's all organized chaos of what's going on, corralling price right here, letting me know this is the next area in the sand for Mobileye to beat, right at $16.77. Next up, we got Circle. Now, this literally defying gravity, right? This did have an IPO, and Circle is involved with a stable coin with USDC. But a Circle has just been exploding. Look at the IPO down here, under $70, now trading at prices at $263. Today, got right up near the $300 mark. What I want to show you, though, intraday, check out what's forming here on Circle. So we've got a left shoulder, and it's really kind of an odd, long-shaped left shoulder if you want to include all of this. But a left shoulder, massive head. We've got a right shoulder, didn't break on this attempt, but if I extend this trend line out, this very well could be breaking into tomorrow. And if that is the case, if that does happen, we're talking about a measured move down to 190, so just under $200. A very big and risky potential reward for playing this stock short. So just be careful. If you do plan on shorting this, keep in mind this stock can literally rip $20 in 5 minutes. So you must be prepared, go lighter. But for now, it's lining up as long as price breaks this inclining trend line, currently right around 255.43. If it breaks that area, we're likely headed down sub $200. Into SMCI. Now, SMCI saw a lot of pressure today. You can see down 9.77%. Earlier in the day, though, it had significant bounce attempts, one of which occurred right here on this parallel channel, worked out like a charm, a beautiful over dollar bounce right there on that parallel channel. However, price did close underneath it. So we have to look for other levels. Where's the next support area for SMCI? And especially SMCI is involved with AI data centers. So this is a hot commodity, especially when they have all their ducks in a row, meaning accounting. So this stock could be one to pick up when prices start dropping down lower on the charts for a long-term gain and long-term momentum. So right here, the first area of support is going to be $39.17. We'll see if price action meanders in this area and then comes down and tags both that support area as well as this declining trend line. If this area breaks, the next area of support is 37.13, followed by this inclining trend line right around 35.56. You notice with all of these support areas all very close, that's all telling me there's a lot of support in this zone that could propel the price on SMCI back up to get back into this parallel channel and ultimately move all the way back up here near the 50% area, upwards of $55.92. Could be a great opportunity for accumulating some SMCI. Next up, we got ALAB. Now, ALAB also got shot down pretty decently here on the charts today, down 7.66%. Now, ALAB is involved with software and hardware in the AI space. And so this should be a pretty high in demand stock considering the big push all these mega cap companies have in developing open AI and also different AI products. So we see here what I found before today's rejected price action. We've got an inverse head and shoulders pattern right here, and that's starting to fail. We did poke above, didn't confirm. So this area, as far as inverse head and shoulder pattern target up to 146.52, looks like it's faltering for the time being. However, if I take this away, we do still have bullish consolidation in this area. As long as price stays roughly at a 45-degree angle right here, bullish consolidation maybe even tag this first support area just under 80 bucks. This bull flag measured move can take price all the way up to 124.28. So this would be a good stock to pick up whenever price starts providing discounts. Next up, Tau. Now, Tau Bitensor, this is one that I've brought up a few different times, and I did want to point out the amazing ability of and the amazing power, really, of technical analysis. So if you see here a couple lines on the chart, this one trend line inclining right here is a head and shoulders pattern that triggered. Notice when it triggered, price broke down, initially created this pivot, and then bounced right back up and retested that neckline. Folks, I've said this many times. It doesn't always happen, but you don't need to chase stocks. Once you see a pattern break, you don't need to just jump in and FOMO and have a full position. You may want to jump in immediately with partial position, but keep in mind and wait for knowing that price could retrace to that scene of the crime. So we retraced to that scene of the crime the very next day on Tau. And then we even poked above it again the following day. Then price fell back down and then bounced up. And then what do we see here? So this head and shoulders pattern had a measured move down to $300.27. We noticed we tagged that on Sunday. Just yesterday, we hit that measured move. Now, let me throw in another factor for why price is bouncing here. Now, keep in mind, I'm not the only technical analysis trader out there. There was other traders that saw this head and shoulder pattern, that saw the break in the price action right here, and knew that Tau in the near term was likely going to be going down potentially to this measured move. So once that happened, there was traders like myself that are buying and picking this up, buying this right here, because it's fallen so much right into a technical area where the move was completed, exactly like what it says. Now, also, let's find another factor as to why price is bouncing today. All I did was grab my Fibonacci tool retracement, and I took it from the most recent pivot here on April 7th all the way up to the high here on May 12th. And what do we have? Lo and behold, right here, the 618 fib retrace, the mammoth behemoth of them all, the 618 was right there and tagged. And look at this fantastic bounce that's occurred so far. This stuff is truly remarkable, guys. And the reason you can see here, 15% bounce from that 618 retrace. The reason I bring up this education is because today we have Investor Empowerment Day. We've got all our education on sale. Guys, do yourself a favor. Educate yourself. No one can take away this education once you've taken it yourself, and you can use it for the rest of your life. Take advantage of this great opportunity. And this wraps up Trading the Close and Investment Empowerment Day. Thank you guys so much for all your participation. I can't wait to be back on the charts tomorrow with you guys. Until then, you all have a great rest of your day.
Timing matters, especially in the market and the bedroom.
No follow through, no volume, no surprise.
But when you start learning real strategy, using real tools, everything changes.
Now that was a full breakout with volume. Chef's kiss.
Mwah.
Verified investing. Trade smarter. Perform better. Not financial advice, just facts, charts.
Should I follow my gut? Only if your gut has back-tested results and trades with a stop loss. Buy high, sell higher, bold, dumb, historic. What's volume mean? It means the whales are swimming, or you're about to get wrecked. EMA or SMA? Whichever one doesn't ghost you mid-trade. Is this financial advice? No, it's a sock with opinions. Should I trade on vibes? Only if your vibes have stop losses.
Verified investing, no cap, all facts. Not financial advice, just...